housing market's been on a tear since the pandemic, with people relocating and looking for bigger properties, and prices have soared as a result. Zillow just today saying prices are up nearly 18% year on year, in line with other recent data points. And my next guest says home prices can keep rising. Joining me now is Matthew Poynton. He's senior property economist at Capital Economics. Matthew, it's great to have you. Explain the fundamental basis for this.
Well, there's a number of reasons why I think house prices can maintain their current level. I think house price growth is definitely going to slow. But I'm also ruling out a house price crash. Firstly, as rates start to rise, most borrowers are protected. They've got long-term fixed rates. We had a refinancing boom over the last few months, and that means most people have locked in these record low mortgage rates. Secondly, mortgage lenders haven't responded to house price booms by loosening their credit standards like they did in the mid-2000s. In fact, they've done the opposite. They've tightened up. We've got credit scores going up. We've got DTIs, debt-to-income ratios, coming down. And that really means that the current mortgage book is pretty safe. So borrowers are well protected from any increase in rates. Another point is home equity has surged. House prices, as you say, up 18% year on year, record gains. So most borrowers have a lot of home equity, and that means they've got a lot of skin in the game. They're going to want to keep up their mortgage payments if they can. So that's another reason why we think that's going to rule out any sort of forbearance surge. We don't see that on the horizon. And without the forced sellers and this forbearance, foreclosures coming through, that really rules out a large fall in house prices.
So I think for a lot of people, they would look at these headline numbers and go 18% price gains to just 3% price gain. That's a huge slowdown. It's like, well, it means prices are still rising. It's a little bit like the transitory inflation discussion, which is to say that even if inflation slows to 2%, it's coming after a couple of chunky years. My point being, why don't you think home prices could outright decline?
Because I don't think for an outright decline in prices, you normally need to see forced sellers. You need to see a lot of foreclosures flooding the market with homes. We don't see that on the horizon. And even if we did get some increase in foreclosures as the ban expires, the market's incredibly tight right now. There's not much supply in the market. Demand is still high. And so any foreclosure is going to be snapped up. There's lots of demand out there to take up these houses if there's more in the market. So they don't really see the big increase in forced sellers that really causes house prices to decline.
Right. And to put it differently, if we start to see that for whatever reason, that would be a much more worrisome sign of a fundamental change from the market dynamics that we see now, even with affordability, declining with this increase in prices. Matthew, leave it there. Thanks for joining me today. It's good to have you.
Thanks.
Matthew Poynton with Capital Economics.